Good morning. This is Dylan Jovine behind the markets. Happy Thursday. Today's Thursday, December 4th. And we're getting to the time of the year where all the banks start rolling out their next year predictions, 2026 predictions. And in this case, we have a lot of exciting ones already. Goldman Sachs has rolled out its 2026 predictions. I thought it was worth sharing with you. Let me see. I got the email for it, let's see, a week ago. So their 2026 investment outlook, top 5 takeaways I'm going to share with you. I wrote some notes here. Central banks are rewriting the playbook. They imagine that the U.S. Fed's going to lower rates twice, and it looks like Trump is going to pick somebody very dovish. Everybody is thinking it's Kevin Hassett. I don't know if that's true. Nobody really knows. But, it seems like the world is getting used to a new inflation regime. For many years, really since post-World War II, the regime was lower rates, low inflation. But it seems like instead of a 2% inflation rate, we're going to be targeting 3.5, which is not good. That's also going to create a lot more political instability as we go on, as people can't afford to eat. That's going to be a problem. Their second big takeaway is AI CapEx is the new global arms race. We've been talking a lot about this. Hyperscalers now account for 27% of S&P 500 capital spending, meaning plants and equipment. When you're a business and you spend on building it out, and the market has underestimated their spending basically for every 2 quarters. So we're still early in the AI build out, semiconductors, infrastructure, agentic AI software, cybersecurity, data management. Those are all in the slipstream of this happening. We have massive opportunities in that, which we focus on quite a bit. Their third big takeaway from Goldman Sachs, market concentration is high. We all know this. But fundamentals are doing the heavy lifting. We know that too. If you look right now, the top 10 U.S. companies represent 40% of the S&P 500. But it's not like the dot-com era in one big way. The companies that really popped during the dot-com era were companies that didn't have any profits. So, this is more like actually in that way the go-go 60s, where you had a lot of profits among a small group, and frankly, the 20s. But anyway, so it's not like the dot-com boom. You still have good balance sheets, strong earnings, and mega big margins underpinning these. So the real opportunity, according to Goldman Sachs, are small and mid-cap picks and shovels plays that enable the AI boom and America First reshoring. And this is exactly what we concluded, which is why we're launching the America First product, America First Fortunes, a week from today. They also say private markets are stabilizing. Private markets, which we have hidden market profits for, their equity valuations are high, but they're not supported by earnings because most of these are small private companies. So what we're seeing here, though, is exit markets are really reopening. IPOs are really reopening. You're starting to see, think about it, when there's turbulence in the market like we saw after Liberation Day and the budget wasn't passed and it was a shutdown. When there's turbulence, what happens is investment banks don't let planes take off the runway. They basically tell these companies that want to go public, you got to wait, you got to wait, you got to wait, you got to wait. But now we're starting to see the IPO market really open up, which is great. And finally, their fifth big trend for 2026 is economic security and power demand will define the next decade. Boy, oh boy, doesn't that sound like what we talk about a lot? Economic security, again, what we're talking about with America First Fortunes. It says here in Goldman Sachs' note, governments are spending aggressively on supply chain resilience, yes. Defense, energy transition, yes. Infrastructure upgrades. We are doing this. That's why we are launching America First Fortunes in a week. There's a big project, a big infrastructure project happening right here in Florida. Port Everglades is really being upgraded for a bunch of reasons, including national defense. And actually, I have these national defense, container, petroleum, gas, national defense. It's really become a jet fuel hub. Imagine a conflict happens and we need to get to South America or whatever for Venezuela and all this stuff. This is where all the fueling for the military and all these things happen. Very important. But we're really upgrading our entire basically infrastructure. We're entering now, again, an era of great power competition. That's the bottom line with China. And we are too vulnerable to do that with the way things are right now. So we got to tool up here on our shores. We got to really make sure that we can withstand something like this. You remember you watched those old World War II documentaries, and It's Germany attacks France, takes over France, and then it swings its tanks and goes after Britain, and then it goes to Russia, and then America enters the war, and America starts out manufacturing everybody. And really, we don't have that right now. So again, we need to be able to really manufacture, really scale up shipbuilding and car, steel, all these things, if in case, God forbid, a war comes our way. We have a great power competitor on the block. That's the bottom line. We got to prepare for it. And that's what President Trump is doing. And I'm not one of these people that says President Trump is he's God, he's a godlike figure. I don't look at the world that way. But I do believe that despite he's not perfect, of course, nobody's perfect, but I do believe that a lot of what he's saying, he's addressing serious issues. And as a result, there are big money-making opportunities for us. But more importantly, over time, our kids will grow up and grandkids in a safer world. So if we could align money-making opportunities with that, I'm all in. Have a great day. I'll see you tomorrow.